And the Indian rupee has seen some losses today after 4 straight days of gains. The rupee came off its 11-month highs today. The traders cite that a large state-owned bank has been buying dollars to meet demand from oil companies. The rupee, in fact, ended the day at 58.63, down 4 paisas. The analysts are expecting the rupee to trade within that 58 to 59.5 mark in coming few sessions. Let's get on board Abhishek Goenka, who's founder and CEO, India Forex Advisors. Abhishek, hi. What's your sense now coming in for the rupee? We've seen steady gains and today, of course, some consolidation.
Yeah, I guess the market is kind of slowly and steadily pricing the Modi factor, and we are looking at the best case scenario for the rupee, at least for the short term, not breaching 58.10 in the market. And I think now slowly and steadily in a couple of days, I think the market is kind of concentrating in the current levels, and I think a move towards the 59 is possible. But overall, we are looking at a broad range of 58 to 61 in the coming 2 to 3 months. Of course, we have seen a lot of exporter selling happening in the market once the rupee has reached 60 and the Modi government has come in place. So, there's that kind of pressure also there. Plus, the inflows are too much, close to around 13 billion this year. So, I get that pressure will remain. So, I think the strategy is slightly different. I think when we move towards the 60, I think selling should happen in the market, and exporters will definitely come in the market to start selling in the market. But I think this is the kind of level we have reached, 58, 58.5. I think the buying interest should start coming in the market from the importer side, I guess.
Abhishek, would you say that, the kind of FI inflows that we are seeing right now, the all-time highs in Indian equity markets, the whole euphoria about a stable government taking over, the rupee really has not been able to perhaps react to that sense?
No, of course. I mean, all the positive news which you talked about, of course, because of that, the rupee has definitely been stronger. Also, on the US front, we are not seeing any kind of new development happening, It's a slow and steady pace of tapering which is happening and which is kind of priced in the market. Even in the US dollar index, if you look at, the euro has been falling in the days. But despite that, we have not seen a significant, depreciation of the rupee anyways, because right now the focus was on the elections. And I think the market is enjoying that for some point of time. Now, after some time, I think the focus will again come back to the macroeconomic factors and the US factors. And then we have to see a blend of both the domestic factors and the international factors. And that will start happening maybe 15-20 days down the line. And then we have to see which particular factor is actually gaining more importance. So if we see a significant hawkish statement from the US, things will again start focusing on those factors. But I think let the market enjoy what they are currently enjoying, and that's the Modi factor. And probably, the room for little appreciation is still there in the market.
Well, enjoying they are. But Vijay, what is your sense? I mean, even as Abhishek is saying, it's about the fundamentals, it's about statements more than the data that the rupee really seems to be reacting at right now, especially since the RBI chief has said that it's more about rupee staying around 60. The rupee really seems to be sticking to that 60 level.
Absolutely, Manisha. I've been maintaining my view since weeks now that 58 is a level I would seek buy opportunities on the dollar, because you try to talk the markets up unnecessarily, try to strengthen the rupee unnecessarily, you lose export competence. I think given the mood of the present government, they would rather let the rupee remain where it is, export solidly, and then let the export remittances come in and strengthen the rupee after sheer performance. By that route, your rupee would be strengthened and you would have money in the bank. Now, trying to talk the rupee up and strengthen it doesn't help anyone at all, except for sentiments which will erode fairly fast. So I would still maintain my view, or stick my neck out and say at 58 rupees to a dollar, I would seek buy opportunities in the USD INR in the prompt month futures series at the currency derivative segment. I would expect 59.5, if not slightly higher, in the coming 4 to 5 weeks time frame.
Vijay, also because we are looking at budget now in a couple of months' time, how would you rate the rupee then for slightly that amount of time? Because this is the time when importers and exporters both are slightly jittery.
Manisha, till the budget time, I think the range would be 57.75 in case the rupee was to appreciate, which is I'm giving the rupee a little more leeway than 58 levels to appreciate. And on the flip side, 60.5 is what I would look at till the budget period. So you are staring at approximately 2 rupees 59 paisa of a broad trading range in which the traders will have to buy and sell.
Abhishek, what's your sense for the next quarter? Where are you putting the currency for the calendar year and for March 2015? How would you look at the rupee panning out in all these times?
So the broad range that we have shared currently in our research is around 57.5 to 61.5. Now that's a little broad, but then there are a lot of factors which is going to play, because if there's total euphoria coming in the market, it can slightly stretch toward 57.5, which is also a 38.2 retracement technical level. And on the higher side, I think 61.5. If something really negative comes in from the US part, I mean something really positive comes from the US part, or things don't shape up the way it is expected in the market, and some kind of surprise in the market. So that's the broad range. But I think the selling will start happening in the market once the rupee breaks 60 or 61 by exporter community, because now the optimism is too much in the market in the currency.
All right, so a very narrow range, and 58 to 61 perhaps is what we are looking at the currency for the next excuse me, quarter as well. With that, Abhishek, we will let you go. Thank you, Vijay, so much for dropping by as well. And that's all the time that we have on Hot Commodities for you. But stay tuned, because Tanya is bringing Rush Hour.